You know that feeling? You're at the grocery store, your wallet's feeling a little tight. What's the first thing you decide not to put in your cart? Well, that is the billion-dollar question for pretty much every brand out there. And today, we're going to crack open the playbook of a real giant, PepsiCo. We're diving into their latest earnings call to see exactly how they plan to win, even when we're all feeling that pinch. So, first things first, let's be super clear about something. PepsiCo isn't struggling. Not at all. In fact, they are coming off a fantastic quarter, which honestly makes their next big move even more interesting to watch. But here's the twist, and it comes directly from the CEO, Ramon Laguarta. He says the single biggest thing holding them back from growing even faster is affordability. Yep. Even with amazing results, they know that for a lot of people, the price is becoming a real issue. And that one word, affordability, is the absolute key to their entire strategy for the year ahead. I mean, just look at these numbers. They beat Wall Street's expectations on both earnings and revenue. They really didn't have to change a thing. So this isn't some company in a crisis, reacting to bad news. This focus on the stretched consumer, this is a calculated offensive move to stay way ahead of the curve. So, okay, how exactly are they going to do it? How do they plan to tackle this whole affordability challenge? Let's break down their playbook. And this right here is so crucial to understanding their mindset. They're not playing defense. As they said on their earnings call, we're playing offense here. They're not just trying to hang on to the customers they already have. They actually believe that by making their products a better value, they can grow the entire snack category, make the whole pie bigger for everyone. Their game plan has two parts, and they are brilliantly connected. First, they're making surgical price investments. Think of it like a surgeon's scalpel, not a sledgehammer. They're not just slashing prices everywhere. No, they're carefully targeting specific products in specific stores where they know price matters most. Then, part two, they take those price cuts to the retailers and basically say, hey, work with us on this, give us more shelf space, and we will both win. It's a really powerful 1-2 punch. And we're not talking about some tiny incremental change. The goal here is a double-digit increase in shelf space for their Frito-Lay products. That is a massive expansion, and it really shows you that the big retailers are buying into this strategy in a big way. But here's the thing, a cheaper price tag is only half the battle, right? You still need to have a product that people really, really want. And that's where the second part of their strategy comes in. They're relaunching their biggest, most iconic brands to make them more desirable than ever. First up, the undisputed king of potato chips, Lay's. They're giving this multi-billion-dollar brand a complete global makeover. Then you've got Tostitos. It's also getting a major refresh, all designed to inject new energy and excitement into the brand. And get ready for this one later in the year, a massive relaunch for the sports drink giant, Gatorade. This is going to be a big one. And finally, rounding out this list of heavy hitters is Quaker, which is being completely repositioned for a whole new generation of consumers. So what does a relaunch actually mean? Well, it's way more than just new packaging. They're really zeroing in on what consumers like you and me want today. We're talking simpler ingredients, no artificials, and adding new functionality like more fiber or protein. They're even using elevated ingredients. Think Lay's cooked in avocado oil. And they're putting a much bigger marketing focus on freshness and the actual farmers who grow their potatoes. All right, now we have to talk about the elephant in the room for the entire food industry, those new weight loss drugs like Ozempic, the GLP-1s. For a lot of companies, this looks like a huge threat. But PepsiCo, they see it as something totally different, a massive opportunity to innovate. This is the question on every single investor's mind. I mean, it makes sense, right? If these drugs are shrinking people's appetites, what does that mean for a company that's built on snacks and sodas? Well, PepsiCo's game plan here is threefold. First, for those smaller appetites, they are doubling down on portion control. And honestly, they're already way ahead here. Over 70% of their U.S. food business is already in single-serve packs. Second, for the big shift towards healthier choices, they're pushing hydration hard with brands like Gatorade and Propel. And third, to match those new eating habits, they're innovating with products that have more fiber and protein, which is exactly what these new consumers are looking for. So the million-dollar question, or I guess billion-dollar question, is will all of this actually pay off? Let's take a look at what PepsiCo is actually promising Wall Street for the year ahead. Okay, here's the bottom line. They're projecting steady, solid growth in both revenue and earnings. And they're planning to return almost $9 billion to shareholders. That is a huge signal of confidence that this offensive strategy is absolutely going to deliver. So this is where it all comes together. PepsiCo has this incredibly bold, offensive plan to win over consumers whose wallets are feeling stretched. They're making a huge bet on affordability, on making their classic brands relevant again, and even on health trends. The question is, will it be enough? Will this strategy secure their spot in our shopping carts for years to come? That really is the billion-dollar question, and this year's one will start to get the answer.